Shari'a Standard 2 we are going to discuss. This is related to Sharika. Sharika is Musharaka, and it is a modern corporations because now in the real world, in the conventional world, we have so many types of organization. We have LLCs, limited liability companies. Some countries we have PVTs, we have LLPs, professional partnerships. Then we have sole trader, we have partnerships, we have joint stock companies. So same way in terms of Islamic Sharia standards, we will discuss a lot of organizational types today with their rights and obligations. Discussion will start with in a typical way as the scope of the standard, that how we define, classify type of sharikas. The first categories, general rulings related to sharika, partnerships, the importance of creditworthiness, reputation. Then a couple of times we make service partnerships. So these service partnerships, in the later part of our discussions, we are going to discuss the stock companies, joint liability companies, partnerships in common and company limited by shares, and we will discuss about allotment, particular partnerships. We will discuss diminishing Musharaka, and we will see when the standard was issued and when the standard was implemented. Let's start our discussion about the partnership scope of the standard. The standard is applicable to all form of traditional partnerships that operates on the basis of contractual partnerships, except the partnership which is exclusively excluded from this concept. The standard also applies to all modern forms of partnerships, including diminishing Musharaka. Standard, of course, is not applicable to the ownership partnerships where the parties jointly own an asset, and it does not include rules for Sharika. Because the practical application of this form of partnership is really not so visible, and it is also not applicable for sharing partnerships, for sharecropping partnerships such as irrigation and agriculture partnerships. We have certain other options for like Salome and Istisnia for that, which I already discussed in some other discussions. Let's start our discussion. What is the definition of classification and types of sharikas? Sharika means an agreement between two or more parties to combine their assets, labors, and liability for a purpose of making profit. Ideally, it can be seen in any way. You are a business person, another business person, but you feel both can synergize. So you make a partnership of for any agreed business model. This is very common day to day. Even the merger, acquisition, consolidations are increasing in the world. So this is part of that. The first category of Sharika is the traditional partnership. Second category, which is the need of ours, is the modern companies, form of different types of companies. Traditional partnerships based on contractual partnership, it has create liabilities, and it can be a vocational partnerships and partnerships for undertaking difficult works or accepting the jobs. Modern type of partnerships, as I already explained, is joint stock, joint liability companies, partnerships. Then companies limited by shares, allotment of partnerships, diminishing partnerships, These are certain type of partnerships which is I am going to discuss in today's lecture in details. Let's start our discussion about the first category, what is the general ruling related to Sharika. It's a partnership, of course, between two or more parties where each partners contribute a specific amount of money in a manner that gives each one a right to deal in the asset of the partnerships, or condition that the profit is distributed according to the partnership agreements and that the losses are borne again with the same ratio. These ratios are mutually agreeable between both partners. What is a Sharika contract? Contract is the same. It should have terms and conditions. It should have offer acceptance. It should have price for agreed terms, profit sharing. This is the same way. A contract can be concluded by the agreement between the parties concerned on the basis of offer and acceptance. This is like for the institutions to enter in partnership contracts with non-Muslims or conventional banks to carry out operation acceptable by Shari'a, unless it has become evident that the fund by these entities for the purpose of partnership from non-permissible sources. So it's like example is like a water. If I put any bad drop in the water, the whole water is going to be spoiled. So if my water is clean from interest, and if I do an agreement with a conventional bank, they have money from the sources which is not legitimate. If you put in this water, my all money will also, if on this concept, it is not permissible. When you know the money is not from the legitimate sources, you cannot do that kind of partnerships. It is permissible, like it is allowed for the institution to include conventional bank as partners in syndicated financing, which operation on the basis of Shari'a, provided the institution sources the right to manage the partnership operations, and that such operations are subject to the Shari'a supervisions. So in day-to-day life, when the volume of transaction is big, and we are talking about all over the countries, USA, Canada, UK, Europe, Middle East, subcontinent, Far East, everyone has their own cultural norms, their religious beliefs. So when it comes to the global expansion and global mindset, of course, there should be ways to integrate under the supervision of Sharia boards. This will be subject to case-to-case basis. Capital of Sharika, of course, should be contributed in the form of monetary assets on which one can rely in order to determine the amount of the capital. So capital should be measurable, reliable, and recognized, and the profit or loss should be recognized in the adequate way as per the accounting standards. It is permissible with the agreement of all partners to provide tangible assets as the capital of Sharika after the monetary value of these assets are determined and expressed. So in any ways you can contribute your capitals. If partners has contributed their capitals in different currencies, these currencies must be translated into a current exchange rate, which we technically call as translation. Generally assets, liability, equity, we do it at the year end when we are going to convert into the local currencies, and in that case, of course, gain or losses will arise. Share of each capital, each partner in the capital should be defined. It is not permissible that debts receivable alone be used as the contribution to the capital. Debts cannot be used as a capital.